with, I should be able to do them both. So I'm hoping everybody can see. Okay, right. So as a lot of people are aware, what is happening at this moment in time. So it is what's the date today? The 15th of June, 2024. And basically the reason why I've come on today is just to help everybody who is on Right to Buy. Now, back in the budget, it was announced that Right to Buy would be changing their discount. So you have got the bank. So you've got the London rate, which is 136,400, and then you've got the outside of London, which is 102,400. And up until the 20th of November, so 5 days time, that is the rate, the maximum that you can have, depending on your location, depending if you've been there for 3 years, and that's the minimum. You have to have been a council tenant for at least 3 years. So the next thing, basically what I wanted to talk about is what the actual process is. So firstly, what you need to do is you apply. So you've got the RTB 1 form and you fill that out and you state again, you know, who wants to buy it. Now, as a mortgage advisor, I obviously do the mortgage part, but some advice about the RTB 1. Now, first, decide who is going to be buying it, because whoever's name that you put down as wanting to buy it on the RTB 1 is the same person that will be on the Section 125 offer notice, and will also be the same person that I would do the mortgage for. So what I mean by that is if, like, say there's a couple and Mr. and Mrs., just for an example, and one wants to buy and one doesn't want to buy, then what we would actually do is the person who wants to buy would put down that they want to buy, and the person that doesn't want to buy would put down that they don't want to buy. If, because they're both on the tenancy, you put both of them down to buy, then when it actually comes to getting the offer notice, what will happen is both the names will be on it, which means I have to do a mortgage for both of them. I hope that makes sense. The other situation is, and there are several lenders that are accepting this, if someone isn't on the tenancy but has been living there for more than 12 months, and obviously you'll need proof. So proof of residence is normally things like driving license, council tax bill. Driving license is probably the easiest. Or utility bill or something along those lines. Those are kind of the three main things: driving license, council tax bill, and utility bill. As long as you've got one of those, then basically that is what you can use as proof of residence. So you can go on the RTB 1 form. Now, I've never filled out an RTB 1 form. I am a mortgage advisor, but I have a rough idea of what needs to be on it. And I've been told, as you can imagine, I've spoken to a lot of people over the past few days since, when the budget was announced. And what I've been told is sometimes people get the RTB 1 form, and then after that, someone comes and values the property. And then you get the Section 125, the offer notice. And then from there, obviously, I jump in and organise the mortgage. But others are actually telling me that, one, there's a lot more on that original form than other people are saying. Some people are saying that they get an additional form after that. Some people are saying that an estate agent has come round to their house to actually value the property rather than an official valuer. So there's a lot of different scenarios going on. But things that are fact: one, you have to fill out the RTB 1 form. Two, you will have someone come and value your property. I mean, at the end of the day, if you think about it, when you're getting the Section 125 offer notice, it has to have the very first figure is what is the property worth. They need to know that. Now, some, again, the discrepancy is some are saying that they got valued higher on the street because they'd done work to their property. Some are saying that it was valued purely on a shell, even though they had done work that had been ignored. Some people are saying they weren't happy with the valuation, so they actually asked for someone to appeal. Now, all of these people are literally the type of people that sort of heard a rumor that something was going to be happening. So what they actually did was they applied a couple of months ago. So I'm talking about people who applied, September, October time, not people that have only applied this week. Now, a lot of people heard, if a certain government come in, this is what the plan was going to be. So they sort of jumped on it in advance. So that was one thing. The other thing was people who've just applied now. Obviously, there is going to be a backlog, in my humble opinion, and that's going to be that. As I said, that is the process. You fill out the form, a valuer comes in, you get the Section 125 offer letter. It says to you what the property's worth, what your discount is, and then what the actual purchase price is. When I do the mortgage for you, the very top price, the market price, is what I put you're buying it for. Then the discount is what I put down as a deposit. And then the next thing is what I would actually say is the loan amount as opposed to the purchase amount. Now, there is a link and it's called the Right to Buy calculator. So I think the link is ownyourownhome.gov.uk /scheme/right to buy /can I afford it /right to buy calculator. But if you Google right to buy calculator, you should be able to find it. And basically what you need to know is the number of years of your tenancy, the type of property. It'll ask whether it's a flat or a house. It will ask you for your postcode, and then it will ask you to insert your estimated value of your property. Now you can go on Zoopla, go on to home prices, put in your postcode and get a rough idea of what your property's worth, and you can put that figure as the bottom. But the reason why I'm telling you about this is because that will give you a rough assessment of the discount based on what is happening pre November 21. Now, November 21 is the day the rates change, and they will range from 38,000 to 16,000. So don't apply on the 21st. In fact, don't even apply on the 20th, because, the internet could go down, or the websites could go down if you're trying to apply, if so many people are all trying to apply. So I hope that helps. Right. So I've got quite a few questions here. So what I'm going to try and do is go through the questions and see what I can answer. Right, so the first one is about CCJs on an RTA. Now, first, let's explain. So we have a right to buy, which is council, and RTB. And that's what I keep on talking about, the RTB1 form, A lot of people have applied on the RTB1 form only to find out that they're housing association and, they can't actually apply. I think the RTA, which is the right to acquire, which is housing association, I think that discount is 16,000. I don't know if it's going any lower than that, but, considering the right to buy is going down from... Where is it going down from? It's going down from between 136,400 and 102,400 down to, it ranges between 38 and 16. I don't know. I won't even lie, I haven't seen any mention anywhere about the right to acquire going down. So it probably is just going to stay at 16, but don't quote me because I don't generally know. Right, but the question is CCJ. Right, so CCJ is a county court judgment. Now, as I was saying, and I've said a few times, what lenders do, banks and building societies, they don't look at your credit score. They do their own internal credit scoring. And you've got people like Pepper Money that don't score at all. Now, the way it actually works is they look at your credit profile. So, for example, with this person's question, they ask if about a CCJ. Now, I have actually done a mortgage for someone with a right to buy who had a CCJ. I had to go to a specialist adverse lender, and it was a much higher rate. Now, I didn't do it for an RTA, I did it for an RTB. So I did it for a right to buy, not to a right to acquire. But I can find out from the lenders. To be honest, when I've spoken to lenders, they use the RTB and RTA interchangeably. And as far as they're concerned, the only thing with an RTA is because the discount is 16,000 as opposed to, the 136,400. The majority of the time, they will ask you, depending obviously on the price of the property, if it is less, if the 16K is less than 5% of the value of the property, they will ask you to put some more money towards it of your own money. With the right to buy, because the discount is, sometimes it's sort of 70% of the value of the property. It really, it is a significant amount. They don't ask for any money to put on top, but then again, it does depend on the lender. Right, my form was available. Really, it's very simple. Okay, that's good. Someone's filled out. That's great to know. I hope I've asked the CCJ question. Call my wife to confirm. Right, yeah. So someone's mentioned that the council rang up to double check some information that were on the forms. Someone else has also said to me that someone actually came round to check. So I don't know if they're using the RTB form to check up on people. I genuinely don't know. But I'm hearing more and more stories about people putting in the application, then people either visiting their house and asking about, are they still living there? Is their wife still there? Are their kids under 18? Loads of different things. So I haven't heard it before today, but at least 3 people now have told me that the council have used the information to double check the status. So maybe there is a pattern. But that's the good thing about this. Everybody can put in the comments when these things happen, maybe even put what council's doing it. Maybe, we can see if there's a pattern and we can just support each other. Maybe we could do that. Right. Someone else has told me that when the valuer comes round, they actually value it slightly less than market value. So that would be great if they did. The other thing I've also been told, this was by a lender, that if there aren't enough private owners within, so it's normally with flats, if the majority of the block, for example, that the flat's in is private council owned and run by the council, and there's not enough private owned, then sometimes they're not willing to give you the mortgage. So that's something to bear in mind. What are the other questions? CCJ, we've read that. It can be cheaper. Sorry, I'm just running through the questions. Right, do I know the best mortgage to go for? It really does depend. As a mortgage advisor, what I will do is, and I've spoken to quite a lot of you on the phone already, but this is what, if you pick me to do your mortgage or you pick someone else to do your mortgage, these are the kind of things you need to ask them. So with a mortgage, some of them include a booking fee, and some of them don't. So basically what happens is, when you're looking for a mortgage, the first thing I definitely say is, depending on your pre-exempt period. So most of you have to have the right to buy and own the right to buy for at least 5 years. A lot of people buy it and sell it on, but sometimes you have to wait 5 years. So because of that, I would go with a 5-year fixed. So when you're looking at a mortgage, there are two terms that you have to look at. The term of the deal, so that's what I mean by a 5-year fixed or a 2-year fixed when they say it, but then also the term, and the other term is how long you'd have the mortgage for. So you might have a 5-year fixed over 20 years, or you might have a 5-year fixed over 10 years. Now you could, and I've done it for people that have got a really small mortgage, done a 5-year fixed for 5 years. So they know exactly what they're paying. But the second one, when I say 5, 10, 15, 20, it can actually go up as far as 40, depending on your age. That is how long you'll be paying it for. So you might do a 5-year fixed, and then you might remortgage and get a new deal and do another 5-year fixed and keep on going till the years are over. But every time you do a mortgage, you can always assess the actual term till you're fully paid off. And that could be, as I said, it could be 30 years, 20 years, 25 years, 10 years. It all depends on A, your age, and B, your affordability. So I hope that clears that up. And the next thing is you've got the different types of things when you're looking at mortgages, just a little bit of jargon so you can understand, because this is what is the best mortgage to go for. Each lender lends on different criteria. I have a system that actually I put in everybody's information, which includes, you know, whether they're on benefits, whether they're self-employed, whether they're employed, whether they've got kids, whether they've got credit card debt, whether they've got car finance, whether they've got loans, you know, all different things. And it recalculates, and then each lender, generally speaking, will lend you a different amount depending. So some are great if you're on PIP and universal credit, they will lend on that. Some, if you've got a bonus, for example, like I know one lender, because they need 2 years, 2 years worth of bonuses. If you have an annual bonus, it isn't a problem. Some just need 2 examples of a bonus. So if you get paid a bonus every month, then you only need to show 2 months worth. But if you get it annually, then you have to show 2 years worth, because they literally want 2 examples. So as long as, you know, like for example, if you're an employee, you have pay slips, and then every year you have your P60, which shows what you've earned for the whole year. So that can be really, really useful if you want to show bonuses and get them included in your affordability. If you're self-employed, it really does depend on your circumstances. So for example, if you literally, like I did a mortgage for someone the other day, and they had 3 years of accounts. The first 2 years, the first year they made a loss, the second year they broke even, the third year they actually made a profit. I was able to do a mortgage based on the latest year, because we were able to explain that the first year they were buying equipment and studying, the second year they were paying off for the equipment, they got a van and they had to pay it off. And by the third year, they'd paid off like all the setup costs, and they were now being profitable. And obviously going forward, the last year is more realistic of how the next few years are going to be. So we were able to argue that. Some people, and I've said this before, maybe, you know, if you haven't been working and you're about to start work, as long as we can explain why you haven't been working, they will be a bit more lenient when it comes to looking at your pay. When it's if you're just self-employed as sole trader and you don't have a limited company, so you don't have like 2-3 years of accounts, then they will ask for your SA 302s, which is your tax calcs and your tax overviews. But you can look at Gateway and HMRC to find out more about that. Right, someone's asked me to go through the deposit again. Not a problem. So basically, for example, say the property is worth 236,400 and you get 136,400 off. When you actually look at your section 125, your offer letter, it will say market value 236,400, discount because they're kind of interchangeable depending on the lender, is 136,400, and then the loan that you want is the purchase price is 100,000. So that's what the form says. It has market value 236,400. Then it has deposit 136,000, discount 136,400, and then at the bottom it says purchase price 100,000. Now you take that letter, or a mortgage advisor would take that letter, and then when they actually were organizing the mortgage for you, they'd say, okay, you're going to buy it for the 236,400. The deposit you're putting down is the 136,400, and you need a mortgage, a loan of 100,000. So that's the way it would work. Now, not all lenders are born equal. So just like I said, when it's working out your affordability, some will take your bonus, some will take university credit, some will accept if you've got a CCJ, some will only want, a straight employee, some will take all your overtime, some will take 50% of your overtime, some will take your child maintenance, some will take it if it's only court-ordered child maintenance, some will take it if it's non-court ordered, but you've got 12 months history. There are so many different lenders with so many different criterias. So that's why, it really is useful to have a mortgage advisor that has access to everybody's different criteria. And so that is really useful. But the next thing to consider when you're looking at all of that is do right to buy. So that some lenders will say, don't worry, we don't have a specific right to buy mortgage, just look at our residential mortgages. And then some will say we do have a specific right to buy mortgage, so look at those. And then others will say we only take 95% of the discount. So in the situation where it's 136,400, they will only take 95% of that. So 95% of 136. So I've got 136,400. Anyway, my calculator's not working. That's fun. See, it's live. But it would be 95% of that. So that's roughly about 7,000 off, because 10,000 would be 13,000, wouldn't it? So anyway, they would ask for 95% of it. But what I'm trying to say is every lender is different. I spoke to one lender today, and they will take the whole 136,000 off, but they also want you to put another 5% on top. So the discount would be, the deposit would be more than 136,400. It would be like 140,000, something like that, or just a little bit over. So each lender, you really do need to look at the lenders based on your criteria. So I hope that explains how it all works. Right, so if you want to appeal against the offer, should the council send out their valuer again? I'm not actually sure. I've never seen anybody do this. I know you can appeal it, and I just assumed that it would be a different valuer, because at the end of the day, wouldn't the same valuer value it the same? So I think you'd get an independent one, and sometimes they may ask you to pay for it yourself. So that's something to bear in mind. The next thing to look at is can you get a mortgage after you finish your IVA? So IVA is when you volunteer, so it's a debt management system basically, and when you've got debt and you're paying it off. Now, with your credit report, as I said, they don't credit score it, they credit profile it. So if this IVA you've finished and you've paid it off and it's dropped off the report, is over 6 years old, then it's not an issue. If it is, then there are certain lenders, just like with CCJs, there are certain lenders, and it depends on the age of the debt or the discrepancy or whatever it is. Some will look at it after 12 months, some will do even better. Like there are some adverse lenders that will tier it. So depending on whether the bad debt is a year old, 3 years old, 4 or 5 years old. After it's 6 years old, it's irrelevant because it comes off the report anyway. But in those different things, they will offer you a mortgage, but just different rates. So you've got to be able to afford it, basically. If you get PIP, can you get a mortgage? Yes. There are some lenders that want you to have earned income alongside PIP, universal credit, and all these other things. And then there are some that will base it purely on all your kind of benefits. But what I will say is it all again depends on affordability. At the end of the day, you've got to have enough benefits in order for it to cover a standard mortgage. And always remember how the housing element on your universal credit or housing benefit, or whatever you want to call it, or whatever it's called at the moment, there are so many different things, but if it does have a housing benefit, housing element of it, once you are no longer a council tenant, i.e. you're buying your right to buy, you don't get that benefit anymore, just to be aware. The other thing is, once you own your own property, it's just like if you bought it privately, you have to maintain it, you have to pay, if it's a flat, service charge, ground rent, you have to pay all those things, just like if you bought a flat down the road and it wasn't council. As long as you're a council tenant, the council will pay for maintenance and all that kind of stuff. Once you own it privately, it's just like owning a private place, a non-council property. You will have to pay all those costs. So just please be aware of those. Does it matter that my adult kids are on the form? Right. With your adult children, if you decide, it depends what you mean by on the form. If you put them down as buying with you, then obviously they lose their stamp duty exemption. That's the one thing I would say. But they do also will be able to help you with affordability. So you've got to kind of weigh up what works for you. So what I was trying to say the other day is the way it works with stamp duty at this moment in time is, as long as your property is worth, and that's the top figure, the market value, not the price you're buying it for, it's the amount it's worth. As long as that is less than 425,000, you don't pay any stamp duty. But after the 31st of March, and some of these people, some of you who are applying now, by the time you actually exchange and complete, it will be after the 31st of March. The actual exemption for first-time buyers goes down to 300. So be aware of that you may have to pay some stamp duty if your property is in that range. So just be aware of that. There is a stamp duty calculator. So if you want me to show you where that is, that's not a problem as well. So what's the next question? Oh, right. So with the adult children, you have to make a decision there whether you want them to lose their stamp duty exemption if they will be buying themselves one day. But then again, if them being on it is the only way you can afford it, obviously that's a discussion that you will need to have. How much longer will it take to consider? There are many applications because it's normally around 24 weeks. Right. Genuinely speaking, it takes normally 4 weeks to hear back. And then once you get the Section 21, the offer notice, they give you 12 weeks. There have been issues where there are delays, and sometimes your conveyancer solicitor can get involved at that point, once after you've got the mortgage offer and you're going to exchange and complete, and they can get extensions. I've seen solicitors get 56-day extensions and things like that. But I genuinely believe that the councils overrun a lot. They're getting a lot more applications that they normally do. So I think you'll be waiting on them rather than them rushing you. But who knows? Each council's different. I think that's all the questions. My adult children wouldn't want to buy because... so I think I've answered all your questions. With the valuation, obviously you want it to be valued as low as possible, because at the end of the day, it's going to cost you. So So that's one thing to just be aware of. On the day, you want it to be down valued as best as possible, because the higher they value, the more it's going to cost you. Um, so yeah, I think that's all the questions. Right. So the way it works, so now I'm just going to talk about the buying process in general. So the first thing I just want you to be aware of is, obviously, once you apply for the mortgage, the next thing is the bank will send their own valuers to value the property, because they're going to lend you a sum of money. They want to make sure the property is worth what they're lending. And once they've sent their valuers in, they will ask to see documentation. Now, normally they want to see your current accounts, 3 months bank statements. So if you've got one current account that pays the bills and one current account that shows your money coming in, they'll want to see both. The next thing is, if you are putting some money towards it, they'll want to see that bank statement as well for the savings account or wherever that money is. And it can be, they'll normally want 12 months history of that. That's something to be aware of. The next thing is, if someone's lending you the money and it's down as a loan, that will be added into your affordability. So it'll actually go against you, it'll reduce your affordability, because they could see that you're paying some money across. But if it's a gift, and sometimes they ask whoever's gifting it to you to fill out a one pager to say it's a gift, then obviously it doesn't affect your affordability. They may ask to see a bank statement from who it's coming from, just to sort of make sure. Obviously, there's money laundering and other issues that banks need to check. So that's something to be aware of. So once all of that has been sorted, then the underwriters at the bank tend to just look through all the documentation. And what they actually do is, while they're looking through all the documentation, they may ask you to prove your ID, things like that. So they might want passport, driving license, as I said, bank statements if you're employed, pay slips if you're self-employed. Then it would be your SA 302s, tax calcs, tax overviews, things like that. So it's a combination of document that they'll ask, and it's normally just like 3 months worth, unless I've stated otherwise for other sources. And once all the documents have been reviewed and the underwriters are happy, they give you what's called a mortgage offer, which is different, obviously, to the offer notice that you get from the Right to Buy. Once that has been done, that's when the solicitor or conveyancer, property solicitor, gets involved. And what they do is they call it searches. So they will run searches. Normally for private, they'll check that you're the owner of the property, the person selling to you owns it and that kind of stuff. But obviously with council, that's not necessary. But they still will do other searches, like when it comes to checking for the water, checking boundaries, things like that. So they will do sort of searches, and that's what the conveyancers do. And then they will ask you when you want to exchange and complete. Now, the difference between exchange and complete: exchange is where you sign the contract, the council signs the contracts. There's one contract each, so there's two contracts. Then you swap it, so you exchange it, and then the other person signs, and that's how that works. And that's after, obviously, you've got the mortgage offer. I know certain councils only do exchange on certain days. So there've been situations where you've got all the paperwork, you're ready to go, it's Monday, but they only exchange on Friday. So you've got to wait those days. So on exchange, what also normally happens is the deposit is handed over. But again, because this is Right to Buy, unless you are putting any money down, it's the deposit is the discount. So there's no real money changing hands. But if you are putting some money on top, and I know a lot of people are either cash, putting all the money to buy the property, or putting part of the money. So for that reason, that money then gets sent to your solicitor to hold in a client account. And then what they'll do is they'll send it to the council's solicitor. Then either a week later or sometimes, you know, a couple of weeks later, it will be completion. Now, normally, if it was a private sale, completion would be when the estate agent gives you the keys and all of that. But obviously, you've lived there that whole time. So there is no one to give you the keys. But what will happen is the funds that the bank are giving will then come down. So what I mean by that is they'll be released from the bank and they'll go to your solicitor. Your solicitor will check that they have got you know, the deposit, either the section 125 or some money that you're personally putting on top. They'll also check that the mortgage is there, and then all of that money goes to the council solicitor. Once everybody's happy that they've got everything, that's when you you know, they officially hand over. I mean, it's not even keys because, you know, you already live there, but that's when they officially say it's completed. And that's how it works. I'm hoping I've sort of gone through everything that you would like to know. If you do have any more questions or anything along those lines, by all means, please feel free to you know, send me a DM. I'm more than happy to arrange calls. And obviously, I've got a lot of videos, as I have mentioned before, on my YouTube channel, Mortgages and Money Matters. So based on that is also would give you a lot of insight into how mortgages work and different things like that. So thank you for your time, and I hope you've enjoyed it. And as I said, if there's any other questions that you want, then by all means put a comment or send me a DM and I'll be happy to get back to you. All right then, take care. Bye bye.